Get started. First thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay. Again, if you have any questions, you can just put them in the question box. If you have questions that I can't answer, you can put your name and phone number or your Teams username. Skype's not around anymore. Teams username in the chat box, and Rory from Right Line will give you a call and answer any questions, or you can give him a call at 786-732-4656. I'll put this up again at the end of the presentation. All right. This is just a graphic of what the Compass system, Compass Text Alert Service, the software now that we use to identify high probability trade setups is called the SPY Super System. It used to be called the Compass system when it started, and I still call the alert service the Compass Text Alert Service. But Compass system, SPY Super System, they're the same thing, except the Compass system has been modified and improved to be what's called the SPY Super System now. But this is what it looks like. The SMS alerts go right to your phone, and I get them, and I'm on the alert service, so I can look at how much time it takes. It takes about 5 to 10 seconds. I'm on Verizon, 5 or 10 seconds to get my alert. Okay, I'm going to talk about this. If you've heard my webinars before, you've seen this, but this is kind of important. It's important to understand what moves the market, what drives the market. I mean, some days you'll notice the market's just chopping. Other days it has a nice trend up or a nice trend down. Something drives the market when it's in these trends, and the market consists of basically two groups. These little marbles here, these small little marbles, these are retail traders. I'm a retail trader. I suspect everybody else that's in the room today is a retail trader. It's important to understand that when retail traders are making up the majority of the trades, in other words, there isn't an awful lot of institutional involvement, what you're going to get is a lot of chop and chaos in the market. We as retail traders cannot generate direction. We can't create a trend in the market. We can't break a trend in the market. All we can do is take advantage of what the institutions are doing. So when we identify the fact that it's mostly retail traders in the market, which we can do through our SPY Super System, we don't take those trades. Now, when the institutions jump in, and this is the institution, this big marble, this is what moves the market, especially when the institutions, and there's a group of them, are pushing the stock or the indexes in the same direction. They could trade against each other, in which case you're just getting additional chop. But when the institutions join in and take a stock like NVIDIA or Tesla or Netflix or Microsoft or anything in one direction, and there's a bunch of them all trading in the same direction, we'll know about it. And this is what moves the market, right? Now, what makes up institutions? Well, there's four groups. Institutions are made up of investment banks, such as JP Morgan Chase, Morgan Stanley, Bank of America, HSBC. You've heard them all the big investment banks. They're huge. They have billions and billions of dollars to trade. They have algorithms that they use, which are programs that have been written to trade the market. That's where about 85% of the trades come from. And these algorithms can be based on, they read the news, they look for specific setups in the market, they look for things that retail traders they know do, like using MACD crossovers. They can identify that, they can take advantage of that, and they can drive it through it and then drive it back down again and take advantage of the retail traders and basically close them out. So they'll do that, and it's important for us to understand what they're doing. Now, it isn't just investment banks that make up the institutions. It's also hedge funds. There's hundreds of hedge funds with, again, more billions and billions of dollars to invest. They also have algorithms, and then you have pension funds, police pension funds, state worker pension funds, fireman pension funds. Again, more and more billions of dollars, but these are part of the institutions. And the last one would be mutual funds, T. Rowe Price, Vanguard, billions of dollars that these folks have. So this is what makes up institutions, and this is what the piece of software that I'm going to show you, which is the SPY Super System software. This is what we look to identify what they're doing. Are the institutions in the trade? In which way are they pushing? And we want to take advantage of that and join them. If they're chopping around with just retail traders, we don't want to be in it. Okay, so that's what drives the market. It's important to understand that. this is a little bit off topic, and I just threw this in here. I use this for an analogy. This is a blackjack table. Ace and jack spades here, nice blackjack, couple of $100 chips. What's the heck has this got to do with trading options? Well, the reason I put this in here is you ever talk to anybody, any friends or any relatives about you thinking about becoming a trader or trading options or trading stock, what you're going to hear from a lot of cases is it's just gambling, you can't win, you don't do it. It's just gambling, you can't win. So the question is trading stocks and options, is it gambling or do we have an edge? Well, the reason I put this in here is when I was much younger, when I was a kid basically, I made my living playing blackjack in casinos as a card counter. Obviously, I was over 21, but and I did this in Las Vegas. Played in a lot of casinos, and I made my living doing it. Now, when I was known as a card counter. Just to clarify a little bit, we don't actually count the specific cards. What we do as a card counter is we track the cards as they're removed from the deck, and just as the smaller cards are reduced, come out of the deck, reduces through 7, we increase the count to a positive number, and as big cards come out, we reduce the count, and it becomes a negative number. The reason for that is when there's a lot more little cards in the deck than there should be, then we have an advantage. When there's the house has an advantage. When there's a lot more big cards in the deck. In other words, as the little cards come out, reduces through 7, to the point where the composition of the remaining deck has a lot more big cards than little cards, then the players have an advantage. So what we did was we just raise our bets when it was in our favor and lower them back down to the minimum bet when the house had the favor. But that's what card counting is, and that's what I did for quite a while. The reason I point this out is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader doesn't have any edge. So in essence, you are gambling. So basically gambling, playing blackjack without a strategy, and trading options or stocks without a strategy is basically gambling. You don't have an edge. You have to have an edge. And both of those things, besides having an edge, they both require discipline and emotional control. This is really important. You need to have a strategy that gives you a mathematical edge over other retail traders in the market. That's what the SPY super system does for us and what our criteria does. But in addition to that, you have to have discipline and emotional control. This is what hurts most retail traders. Even if they have a methodology that works, they have a hard time maintaining discipline and patience, and they have a hard time maintaining emotional control. You got money in the game, it creates emotion, and this is what you want to avoid. So I consider the SPY super system, which I'm going to show you, as my card counting system. In other words, this is what gives me an edge over other retail traders, allowing us to become consistently profitable. And so the SPY super system's software, in conjunction with identifying the best high probability trades, can lead to consistent profits. So we need to find stocks that are high probability, and then we want those high probability setups to also have institutions in the trade at the same time. That's the criteria that we use. So this is why I'm having it here, and I think it's a pretty good analogy, really. Okay, so in the room we have a few rules we trade by. First thing is trade the best and skip the rest. This is what the SPY super system does for us. It finds out if institutions in the trade. That's going to put it on a road to being one of the best. There's other criteria, of course, and skip the rest. So if you find a trade that looks like a good setup, but the institutions aren't trading it, for example, then you're going to skip it. And this is really more important than trade the best. If you can skip a lot of trades that would have turned into losers, it's just like putting money in your pocket. This is just as good as a win, and this is a very critical element to this. Okay, and the second thing, and I point this out in the room every single day, is our objective as traders is not to make trades. Our objective is to make money, right? Too many traders think they need to be in trades all the time. They can't sit there and be there for an hour without having a trade on, so they'll start to justify reasons to take it. Remember, our objective isn't to make trades. Our objective is to make money. We do that by taking the very highest probability trade setups only and trading them based on our methodology. That's what makes us money. All right, and this is really key. You've got to maintain discipline. Once you understand and learn the proper methodology, we'll talk about that. It's not that complicated when you've got the SPY super system. You've got to maintain discipline and don't stop looking around for trades because you're bored or because you saw somebody make a posting in X about a stock, or CNBC said this, or Fox Business said this. You don't listen to that. You're going to maintain discipline and stick to the criteria that that the system gives you. So you got to learn and follow that process. Right? That's very important. And remaining patient is the key thing here. And this applies to a lot of things. Not over trading. Don't force a trade just because you're bored. Don't jump into a trade when it's extended too much to the upside or to the downside. You get FOMO. That's emotion. You think you're missing out on money. Remain patient. Wait for the stock to come to a setup level that's what you want to use, a support or resistance level. Wait for it to get there. These are critical elements right here to becoming successful. So as a profitable trader, we need edges over the retail traders, because we're going to be taking our money from other retail traders. We're not going to be taking money from institutions. We're going to be following the institutions and taking our money from other retail traders who don't have the same information, the same software, the same expertise that we do. Our edges, 4 key ones here. The SPY Super System software telling us whether institutions are in the trade or not. If institutions aren't in a trade, I'm not going to take the trade. Whether it's an intraday trade off of a 5-minute chart or a swing trade off of a daily chart, if my software doesn't show me that the institutions are in there, I'm not going to take it. Hey, Richard, wouldn't the sudden appearance of large volume be a sign of large banks and other groups? I mean, volume does volume helps. Volume helps with that, but it's not a big enough. It's not a standalone indicator for whether institutions are in there or not. What you're looking for is a confluence of criteria to show you that institutions are in the trade. There's several different things. It would be momentum changes, it would be money flow, and the momentum is the biggest thing that I'll show you. It's important, and a lot of times the volume will follow along with that. But the volume alone isn't enough. It's not enough to tell you if that's happening or not, because if the volume is low for the day and you get a little spike in volume, you don't know whether that's institutions or whether it's just a bunch of big retail traders pulling into it. So it's before I had the SPY Super System, it's one of the things I used to identify whether institutions, but it's not effective. It doesn't give you a big enough edge, or any edge at all a lot of times. All right. Second thing that we use besides the SPY Super System is trading relative strength and relative weakness. All right. Relative strength and relative weakness does not mean RSI. Please don't confuse this with an RSI indicator, relative strength indicator. Trading relative strength means looking at your stock that you're interested in trading and checking how is it trading against the SPY right now, like on a 5-minute chart. If the SPY is moving sideways or down, and you've got a stock that's moving up, stacking green candles, it's got relative strength to the rest of the market. That's relative strength. That's what you want. You want something that's outperforming the SPY to the upside or outperforming the SPY to the downside. Or you can use the Qs. SPYs or Qs, either one. The S&P 500 or the NASDAQ. So that's another big edge. And this is an edge that a lot of retail traders overlook altogether. They don't take relative strength and relative weakness, as we just defined it, into consideration. But it's very, very important, because if you find 3 trades that are set up and the institutions are in and they look good, you want to take the one that's got the best relative strength for the long side and best relative weakness to the short side. Trade with the market trend. If you got a market that's has a bullish trend for the day and it's moving up fairly consistently, then you want to go for longs. It's going to give you an edge. You're trading with basically a wind behind you. So trade with the market trend if there is a market trend. Sometimes there isn't. Sometimes you just have a lot of chop. And then buying your support and accelerating your resistance. This is critical. Wait for a stock to come to a support or resistance level, and we'll talk about those. And then confirm that it bounced off the support level to go to the upside, or bounced off of the resistance level to the downside to get into the trade. You want to get in as close to those levels as possible, because if you do, if it goes against you, your loss is going to be minimal, because you don't have very far to go. If you're chasing a stock when it's when it's way away from support, like the VWAP, for example, the volume weighted average price in the 5-minute, and it comes back down toward the VWAP, you're going to have a fairly big loss, and you'll have a hard time even staying in the trade. So those are the 4 edges that we've got. And they're all very important. This is the key thing here. I don't want to be in trades if institutions aren't in there. All right, and this, what used to be called the Compass system is now called the SPY super system. What's it do? Well, it identifies the highest probability trade setups. Well, sidestepping setups that look good will fail more often they succeed. And we talked about this. It does this by identifying when institutions are driving the move and when they're not. And I'll show you how it's presented. And the Compass software, or the SPY super system software now, it analyzes complex trading data, displays the results in easily identifiable visual format. And you'll see this. And one of the nice things about the software is it actually allows relatively new traders, novice traders, because this is presented in color codes, to know when institutions are in the trade and when they're not, without having to understand a lot of technical analysis. So the RSI shows stock that has an uptrend compared to SPY or Qs. Do you overlap the graphs of each? What I look like if you're talking about a SPY super system? No, it depends on the kind of trade you're looking for, Richard. If you have to distinguish between an intraday trade, a trade that you're going to get in and just stay off like a 5-minute chart for the day, or if you're trading a swing trade, in which case you're going to be looking at a higher time frame. Typically, I use a daily chart, right? So then I'm going to be looking at multiple time frames for relative strength. In other words, if it's relatively strong on the daily chart and I want to go long, then I would look at the 5-minute chart, and if I've got relative strength on the 5-minute chart, that's going to confirm that this is a good place to get in. But if not, I'm going to probably wait until that 5-minute confirms to that. So it just depends on what it just conforms to what particular kind of trade you're taking. And I guess I don't overlap the graphs on my SPY super system. I also use TC2000, where I can look at the daily and 5-minute chart, etc. But I'll get into that. I'll show you that. So this is how we get an edge over retail traders. We take trades that are being driven by the institutions. I keep repeating this. This is important. Trade stocks that have relative strength or relative weakness to the SPYs or the Qs. And the main reason for this is if the market turns, if you're in a trend and the market turns against you, if you've got a stock that's been outperforming the SPY trend or the Q trend, it's going to hold up better. You're going to minimize your losses. You'll likely be able to get out with any taking a big loss. You might even still be able to get a profit out of it. And then trading in the direction of the overall market if we have one. So again, our trades will be supported by institutional buying or selling. The stocks will be outperforming the SPY, and they are moving in the direction of the overall market. That's the big edge for us. Again, if you can do this, just these things right here, you'll have an edge over about 95, 96% of retail traders in the world. Most of them don't know this. All right, now I just want to emphasize before I start showing this SPY super system software, I want to go into a little bit of why this is so important. The SPY super system software, to me, it's the critical element in finding and trading the highest probability trades. Again, SPY super system is the engine that drives our exceptional results. When we get into the portion where I'm going to show you what kind of results we've had in the room and on the alert service, over each month and the different trades we took, I want you to remember that the reason that we're able to get those kind of results is because of the SPY super system. This is what drives it. And the ability to identify when institutional players are driving a bullish or bearish move and when they're absent, it's the key factor in pinpointing high probability trade setups. That's the function of the SPY super system software, and it's the critical component. All right, so that's the critical component when we talk about the SPY super system. There's other criteria for finding the best trades, but this is the first one. All right, and by the way, I do a right line for the YouTube channel. I do a live 1-hour feed on each day at 11:30, where if you're on the YouTube channel, you'll be in the room with me, and you can see the charts I've got up. You can hear me answer questions. You can ask questions, talk about all the charts. By the way, as in this room, as a intraday trader or a swing trader, the SPY super system and myself, as far as the room is concerned, I'm in there every day from market open to market close. This is pretty rare. I don't know too many rooms where you actually have somebody that's in there all day long answering questions, showing charts, and we have a lot of people in there. And of course, they're asking questions about specific setups. And a lot of the traders we have are very, very experienced and very excellent traders, and they find a lot of the trades we take in the room as well. So, but if you go on the YouTube channel, you get into the room each day for about an hour, so you can see what we're doing. You can hear what we're doing. We talk about strategies. We talk about the SPY super system. We talk about potentially good setups, etc. All right. I just got to run through this quickly. I show this because I just kind of want to show what I feel is the 11 most common mistakes that retail traders make, and this is because I've made most of these, and I did a video on these, but I'm just going to run through them quickly. Not considering current market conditions when you're trading. In other words, if there is no trend, you're having a choppy day, you've got to change the size, how big a trade you take, how long you stay in the trade, how quickly you take profits. Not considering current market conditions, very important. A lot of traders don't even pay attention to it. Over trading, I think that obviously is self-explanatory. Trading your P&L instead of technicals. This is kind of something that I really think is important. A lot of traders will trade their P&L. The P&L is what people look at to see if they're red or green on a particular trade. But when you enter a trade, you're entering a trade based on technical setups. You should be getting out based on technical setups. If you're trading your P&L, you may get in or out just based on how much money you're up or down. That's not going to work. It's just not going to work. Richard, let's see. Not ready to use your system. Is the hour of trading open to all with subscribing to see how your system works? Yeah, absolutely. If you come into the YouTube feed, you'll be in there. You'll be able to see me in the room and see what we talk about, see the setups that we're taking. Basically you'll see the whole thing for an hour, so you can exactly see what's going on. Okay. Over leverage. Oh, this is what I'm going to cover here in just a second. Trading what you think instead of what the price says. This has been a particularly hazardous thing for retail traders to do. Back here in the spring, the market started to go down when they put the tariffs on, and it went up when they took the tariffs off, and there was huge amount of bearish sentiment in the market. A lot of people were telling everybody they should get short. All the gurus were saying you should get short. There's a correction coming. The tariffs are going to kill the market. So people were trading what they thought or what they heard about or what they saw. They read an X or they listened to a guru tell them to go short. Meanwhile, the market was going up. And this is really such a critical thing, because during this whole time, from April through August, every day in the room, I would say, please don't go short. Don't listen to what you hear or what you see, what you read. Look what the market's doing. Trade what the market's telling you. It was very bullish. We'll talk about that just quickly here. Over leveraged, obviously taking too much risk. If you're used to putting $1,000 into a trade and you jump up to putting 3,000 in, that's over leveraged. It's got too much risk. You're going to have too much emotion. You're not going to trade the same way because you're nervous. Okay. Not using a daily chart for swing trades. Again, another critical thing. When you go into a swing trade, you're going to hold it overnight or a couple of weeks. Don't be trading long if the daily chart is bearish. It sounds obvious, but I see so many people taking trades. They look at a 5-minute chart. They love the trade. They go into it for a swing trade. It's a bearish trade, and they're going long on it. And I keep saying, please look at your daily chart first. Lack of patience obviously goes without saying. Forcing trades, which is related to lack of patience. Attempting to pick tops and bottoms. Tesla can't go any lower than this. I'm going to get long. Microsoft can't go any higher than this. I'm going to get short. You've got to wait for the tops and bottoms to be confirmed by technicals. You just can't think that something's gone too high. Believe me, they can go a lot higher. This is what you hear all the time on a stock that's reached a new all-time high or a new high for the year. What traders will say, it's too high. I'm going to short this thing. The facts are, when a stock gets to a new all-time high, it's likely to create more new all-time highs after that, as opposed to going back against you. So keep that in mind. Attempting to pick the up, not waiting for confirmation to enter a trade. In other words, a stock breaks up through a resistance level, looks like it's going to go long. You've got to wait for that to confirm. And that's what Heiken-Ashi candles will do for you. They will give you confirmation of a break of a trend. And then FOMO, fear of missing out. Again, you can see most of these are related to greed and fear. All right, FOMO, fear of missing out. You know, trading your P&L, the P&L goes against you. It's red, even though those trucks, the setup is still good. You now have emotions. You're fearful of losing money, right? And FOMO is the fear of missing out. This is actually greed. That's a motivation of greed and fear of missing out. All right, so one thing I'm going to show you here is this one: trading what you think instead of what the price says. This is a quote from Stephen Hawking, and I really like this because this really applies very well to trading what you think and not what you see, right? Which if you think that the market's bearish because you saw it on X, or you saw a stock that's going to be bearish on X, or you heard some guru talk about it, or they're talking about it on the press, you're trading what you think, right? And your think is your bias is being influenced by what other people think. So the greatest enemy of knowledge is not ignorance. The greatest it's the illusion of knowledge. So the greatest enemy of knowledge is not ignorance. It's not knowing. It's thinking you know something that isn't true. And that's what trading what you think is. And it's killed so many traders this year who were bearish from April to August. They stayed bearish, they stayed bearish, they stayed bearish, and they got their accounts blown out of the water because they were trading what they thought based on what they heard instead of what the market was showing them. And the market was obviously bullish the whole time. Okay, now the color codes in the SPY super system we're going to cover here. We've got 4 colors. Everything's coming based on 4 colors. You have green, which is bullish strong. You have blue, which is bullish trend. You have red, which is bearish strong, and you have yellow, which is bearish trend. This is what the 4 colors we're going to see. Now this is what the SPY super system looked like a few weeks ago, and I've updated it. So then I'm going to show you both of these. But this is what it used to look like. All of these things are the same. This is a current time frame momentum, multi-time frame momentum, long-term trend. These were all the same with the colors on there. And this is the actual modified Laguerre. This is what shows us the momentum with the divergence stripped out. It's pure momentum, right? Very critical. Then up in here, we have a few things. And we got a VWAP here. This is a volume weighted average price. This is a critical level. This is what we use for entering trades on a 5-minute chart. All right, support resistance, VWAP. Then we also use this, the 15 EMA, this little green line. That's also a support resistance level that we can use for entering trades on a 5-minute basis. This white line is a pivot point. This is a very key level. This operates at this very good support resistance level. I don't use it for entries, but what I do use is if I'm in a trade that's coming down and I'm short and it gets close to the pivot point, I get ready to take profits. And then we have a thing up here that's called VOLD up. This shows us what the market internals are. Market internals are what all the stocks in New York Stock Exchange are doing. This doesn't apply to the individual stocks. This applies to the whole market. So I can see if the market overall for the day is moving up. Here it was moving up fairly strongly, moving up weekly, moving down weekly, or moving down very strong. So I can see exactly what the overall market is. So when I look at a particular chart, I can see if this chart I'm looking at is aligned with the way the market is at that point in time. All right. So again, that was the current time frame momentum. I already put it on here. Market internals. This is also a template you get if you get the software. This is a template for folks who just want to trade intraday, not interested in swing trades. You're just going to be looking at the current time frame momentum. This is the one indicator that we use for intraday trading, along with the indicators up here, the moving averages, etc. All right, now I did update the SPY Super System chart to the new one. Now the one, if you buy the software now, this is what it's going to look like. And I optimized it for what I consider clarity and precision. I added the 8 exponential moving average, which I've used for a long time, but it wasn't on here, and I put it on here for improved signal confirmation, trade timing. And I use the 8 and 15 kind of together in the conjunction with each other. And I'll show you that. So this is what the SPY Super System layout looks like right now. And this is on Thinkorswim. I use it on Thinkorswim. It also runs on Ninja. Those are the only 2 places it runs. But this is my Thinkorswim platform. This is what it looks like when I show you my live charts. It's going to look like this. So what we've got here, this is the Laguerre oscillator, as I just mentioned. This is not just a straight oscillator. This has the divergence stripped out. Most oscillators have divergence and momentum together. We strip the divergence out of there. We just trade straight momentum. Very critical. And here's your colors. Yellow and red are bearish, blue and green are bullish. So you can see in this particular 5-minute chart on the SPY, if we were trading SPY, we'd want to be trading it short because it's gone yellow. We're not looking at the multi-time frame on the 5-minute chart. We'd only be looking at it on the daily chart. All right, so that's what these colors are. This is multi-time frame momentum. So this is what the 5 minutes are doing. This is what the 5, 15, and 45 are doing together. So you can see the 3 different time frames. When you look at them across 3 time frames, they were still bullish. But the current time frame went bearish, and you can see it went bearish right here as we broke down below the 8 exponential moving average. And here's the long-term trend. This would be more applicable to us to swing trades. Okay, a question here. Hey Wayne, does market internals consider if market generally going up, majority of stocks are only the big 7? No, the market internals looks at the volume of all the stocks going up and subtracts the volume of all the stocks going down. It's weighted out as well, but it's looking at the all of the 6,000 or more New York Stock Exchange stocks. It doesn't look at just the big 7. That would be more like looking at the Dow. This is looking at the whole overall market, and this is really important because if you're in a shorter trade, if you're short anything, let's just say you're short Tesla right now, and all of a sudden the market internals start to move up quickly. They go from being bearish to being bullish. Tesla may not be under that, may not be impacted that by right then, but the fact is there's a lot more money coming in now on the bullish side, which means likely the institutions are starting to come into the bullish side, which means Tesla may not go up, but it's likely to stop going down. So that's what that means. Okay. So again, here's our SPY super system. Again, you get your current time frame momentum, very critical for 5-minute trades. Multi-time frame and current time frame, very critical for swing trades. Multi-time frame is for a day trade, for a daily chart. This would be 1 day, 3 days, 9 days. It's looking at all 3 of those. It's looking at the momentum across all 3 of those, and they've all got to be aligned in the same direction if you're going to get a green or you're going to get a red. And this is the long-term trend. Now again, here's the same indicators up here on the where the price portion of it is. Here's your VWAP, your volume weighted average price. This is a critical level that all the institutions use. On a 5-minute chart, this is where they buy and sell. So this is what we want to use for our main support or resistance level to enter a trade. Okay, so if you were looking at this is the SPY. If you were looking at the SPY here, you see how it goes from selling, red, to buying, bullish right here, selling, buy, red to blue, right? If you look up and you see what the price is doing, you see that it's crossing up through the VWAP right there, right as it moves up here. The price is moving up through the VWAP and up through the 8 exponential moving average. This would be a quick intraday trade right there. You could take it right here and ride it up, and as soon as it starts to flatten out, you take profits. It's not much, it's 3 candles, but it's quite a bit of money as far as trading options on a 5-minute chart is concerned, right? So then we have the 15 EMA, which is another support or resistance level for entering and exit trades, and the 8, which I actually use in combination with the 15. So I can enter trades off the VWAP, off the 15, or off the 8. If you're in the 8, if you get in off the 8, then I would use the 15 as my stop when it's bullish like this. See how the stock price came down to from through the 8 to the 15 and then bounce back up again. Right, so those are what we're using for our intraday trades. And our swing trades, we're going to be using more technicals as far as the daily chart is concerned. But this is what the SPY super system looks like, and this is where all this information is coming from. All right, and it's nice and easy. It looks really nice here because it's just done in color, but there's a lot of calculations going on behind the scenes. All right, so this was a trade, by the way, that I took 1024 a while back. This is a trade I took an NVIDIA on a 5-minute chart. This is a sample. This is a indication of what an intraday trade will look like. All right, notice that it's flipping back and forth between bullish, green, and bearish, yellow, red, bearish, back to blue again, which is bullish. Notice that it's riding right along the 8 exponential moving average. And notice it breaks above the 8 exponential moving average and the VWAP right there on this candle. This is where you would take the trade. It's breaking above the VWAP and it's breaking above the 8. See how little downside risk you've got if it goes against you, right? Very important. So you just ride it up here and you stay in it. I stayed in it, stayed in it, stayed in it, stayed in it. And as soon as it got up here, I get out. All right, you can see the candles are getting smaller, but this is where I get out of the trade right here. All right, as it comes back down toward the 8. Not because it wasn't still bullish. It kind of was. Whoops. But it was because I had made enough profits on this. I had a sell order in there, right? But notice as soon as it starts to curl here, you notice we go to yellow. We don't want to be in this anymore. Even if you were following the 8, you want to be out when the institutions are coming out of it, right? So that was one. This was another SPY trade that we had, and I just want to show you how you can use this chart to actually take trades. All right. Here's a trade on the SPY, and this would have been your entry right here. Notice how it goes from buying green to selling yellow. Not very complicated. The multi was already, but this is a 5-minute chart. This is where you take the trade. It's breaking below the VWAP and the 8. See the 8 right there, the white line? This is where you take this trade. And it stays below the 8, you stay in the trade, you stay in the trade, you stay in the trade. And you probably want to start taking profits as it starts to flatten out if you've got nice profits in it, which you would have in this trade. Right? And these are intraday trades right here. Right? And this is another one. I just kind of want you to see what it looks like, what the SPY super system looks like, how effective it is to identify when institutions come in. See how they come in right there, selling at about 11:10, 11:15. They come in buying. It breaks above the VWAP. You take the trade right there. If it goes against you, you're out for minimal losses. But if you ride it up right here, you're out for a beautiful gain. Okay. This was a Tesla trade. Same thing. Nice green candle in the morning. Here's bullishness. You stay in the trade. It's above the VWAP. You get out right here as it starts to roll over. Notice it goes back to yellow. You're out of the trade. Right. And this was a swing trade. The swing trades are a little bit different. Connie, am I using 0 DTEs on SPY? Yeah, I'm using 0 DTEs on the SPYs, the Qs, IWM, whatever index I happen to be trading. I'm using 0 DTE up till about 1:30 or 2 o'clock Eastern time. Once I'm about 2.5 to 3 hours away from market close, then I'll switch over to 1 DTE. And the reason I do that is I want to minimize my time decay if the stock's going sideways. If it compresses for 10 or 15 minutes, I'm not going to lose as much time decay on a stock that expires tomorrow as I do with one expiring today. That's how I do it. All right, so this is a swing trade in NVIDIA that we took. Now, you can notice that the current time frame and the multi-time frame, again, this is a swing trade, so we need both of these time frames to be bullish if we're going to go long. And they are bullish. You can see that institutions have been buying here for a while. Multi-time frame they've been buying for a while. But when I didn't want to chase it up here. And by the way, this VWAP is not effective on the daily chart. Daily chart is you don't use VWAP. That needs to come off of there. But the stock moved up, and now see how it came down here and touched the 15 after a pullback. This is what's called a PBO, a pullback opportunity. Moves back down to a support level and then bounces. Right here, we took the trade. Right there, as it bounced off the 15, we take the trade. We stayed in it right here, and this is where we get out as it spiked up right here. It was a nice trade for us, 32% profit in 3 days on that one. Okay. Hey, Dwayne, is the system only for options that can be applied to futures, regular stop, FX? It can be applied for anything that if you're using Thinkorswim, anything you can put on there. So you can put in futures, you can trade futures, you can trade the ES or the NQ or the Russell, any of those. You can use it for stocks. Just because the stock's set up and I use an option trade on it, doesn't mean you can't buy the shares or sell the shares. You can use it for stocks as well. It just depends on what you want to do. FX, you cannot. It won't work on for trading FX, which is where you're trading pairs of the U.S. dollar against the Japanese yen. It's not going to work on those, right? It doesn't work on the FX, but it works on everything else. I mean, you can trade commodities, you can trade gold, silver, oil, pork bellies, anything you want. off of it. Okay, so this was an SMR trade we took. Again, you see how it went. This was earnings. You see how it went yellow on earnings right here? It's buying, selling. Here's the earnings. Right back to green again. We take it right there on that candlestick right there. And we were in on 513. We get out at 515. 56% profit. And 2,000 invested, create 1170. I use 2,000 invested a lot. That's what I'm using for my basis of my profitability. My P&L for the monthly trades that we do, or every trade we do, and then every monthly I say this is how much you would have made if you would put 2,000 into each trade, or this is how much you would have lost if you put 2,000 into each trade. It's basically an arbitrary number. Not everybody's going to follow that, and not everybody trades the same amount. But I have to have some way to develop a baseline for profitability. All right, and this was Wendy. This is when we took short. Again, earnings right here. You see how it went current time frame. Momentum on the daily went bullish, and then we took it right here as back when bent to bearish. We took it right here, and we were out the same day on this one, in here and out. That's a pretty nice little move for us. It's only about 50 cents, but 50 cents on a Wendy's option was about $40 a contract per contract, just in that little bit. Okay, this I just kind of throw in here a little bit of levity. This is a person who doesn't have a methodology or a plan they're following. This is somebody who suffered FOMO, jumped into Netflix in the morning because it was stacking green candles, and it turned around and went against him. His stop is way away, and he's freaking out. He's losing money. This is what emotional trading does to you, and it can be anything that can cause emotion in your trade. Right? He's got too much money in the trade, so he's nervous because he can't take that kind of risk, so he can't trade it the way he should. This is what you look like. This is more what you look like if you've got a plan. I mean, you know that if I say that the trades that we take have an 85 to 90% win rate generally. Sometimes it'll be 82%, 81%, but basically it's going to be 85% of the time you're going to win. So if you're in a trade and it's going against you, it minimizes the amount of emotion you should have, because you know there's going to be a lot more good trades coming along. Everybody has losses. You can't avoid that. But if you know that historically you're going to have 85% out of 100 wins, it makes it much easier. And when they work, you know, you feel pretty good about it. Okay, one other thing here. Process precedes results. Process before profits. And I talked a little bit about this before. If you're following your P&L, you're really not developing a methodology to trade with. You're trading off of how much money you're making or losing. How much money you're making or losing, although this sounds counterintuitive, doesn't determine how good the trades are. You can have a bad trade that makes money and a good trade that loses money. But you've got to learn the high probability criteria and strategies. That's got to come before focusing on your results, right? The results will come once you have the strategy internalized and you follow it precisely. You know, don't take trades that don't meet the criteria. Focusing on your results, the P&L, without having a solid process to follow, is going to end up in failure. I've seen it over and over again. All right, so this is basically a high probability trade setup funnel. These are the trades that we take. And first thing I look at, and if I'm assuming here a swing trade, we're looking for a swing trade. The first thing is I look at the daily chart. If I like the chart long, the daily chart looks bullish, then it's fine. If it's bearish and I want to go short, that's fine. If the daily chart is bearish and I want to go long, you skip it. You don't take the trade. And then you align the 5-minute chart to try to find your best entry for that swing trade. Then you're going to trade with the trend of both the stock and the market. Now, this is context. You know, you got to look at the charts on the stock and see what it's done in the past. Is it a nice smooth uptrend? Is it chopping all over the place? Is it gapping up and down? This is what the context is. What's the context of the chart of the stock we're looking at? Then we come to the deal breaker here. The SPY super system must align. If you're going long, the SPY super system has got to align for bullish or bearish. If you're going short, it's got to be bearish. If you're going long, it must be bullish. On a swing trade, that means the multiple time frame and the current time frame, and both got to be bullish or both got to be bearish. Okay, they have to be. Then you look for stocks out of that group that come through here with relative strength and relative weakness. Try to find the very best one, and then you try to enter near support and sell near resistance. Right, and you can set alerts on your charts if you have a stock you like, but maybe it's too far away from support or resistance. Right, so that's important. Okay, Just to kind of go over before we get into some of the details here, this is the strategies I use in the options room and the alert service. And you can trade stock as well. I'm not negating that. You can trade stock. Sometimes you have to trade stocks if the options aren't really tradable. But we do straight calls and puts. Obviously, that's fairly common. Straddles and strangles. These are non-directional trades that we're just looking for a big move either way. They're very effective, very, very effective. Debit spreads, using weekly options expiration. Call debit spreads, put debit spreads. It's a directional trade. You're using weekly options expirations, so the spread itself, when you do a spread on, if you're buying a call debit spread, you buy a call and then you sell a higher priced call, a higher strike price to sell that, and that cuts down on how much it cost you. You limit your risk. It also allows you to stay in the trade longer because you don't have to worry so much about the big ups and downs. And I do use weekly options expiration because that gives us the best ROI on a debit spread. Okay, and then I use time spreads over earnings. This is a very interesting one. Earnings season is kind of winding down now. We just went through quite a few of them, but we had some good time spreads. They actually considered a calendar spread. And this is a non-directional trade that captures what's called a volatility crush. When earnings are coming out, the market makers jack up the price on the premiums for the puts and the calls because they don't know which way the stock's going to go and they don't know how much it's going to move. So they jack it up. It's called volatility. Now, when the earnings come out, now the market makers, they know what's happened. They see the results. They know which way the stock's moving. They know about how much it moved. They pull some of the premium out of those volatility, out of those premiums, and we capture that by what's called using a time spread. We sell current week at the money calls and buying next week's at the money calls. And we capture the difference between this week's implied volatility and next week's. Now, I have videos on all of these, but this is one of the strategies we use, and it's worked really, really well. We just took, what did we have yesterday? I forget. We had a nice time spread yesterday that we did, and what was it on? On Gap. We did a time spread on Gap. It cost us $16 a contract to get in. We get out yesterday morning, almost right at the open for $27 a contract. That's a lot. That's from 16 to 27 is $11 on that. That's a relatively large percentage gain on that time spread yesterday. And we had a lot of them in the room, I'll tell you. Then I use a weekly ATM strategy. This is one where we take a neutral or bullish stock, we sell premium against it by selling puts week after week at the money and holding a longer term dated put further out in time to minimize any kind of down move we get. If the stock moves down and it gets bearish, we can actually buy back the short put and hold on to the long put and ride it down. And you need very specific criteria for this. Again, I have a video on exactly how this works. Right, and then credit spreads to capture premium. I think most people know about doing credit spreads. Again, you need a bullish to neutral market to actually do credit spreads effectively, I believe. That's what I look for, do put credit spreads. And the last one is the SPY Super System here. This is a SPY Super System methodology using the SPY Super System software for very high probability trades to catch the SPY moves. The SPYs, the Qs, the IWM, the futures, you can use it for even for stocks. I have a video on this. This works very well. I cannot post them, and I can't send alerts out on them because they're too fast. We're in these things for maybe 1, 2, 3 candles, 4 candles. So they're very quick, but you can learn it and you can take advantage of it. And I have a very detailed video on how to do those. We've had some outstanding results with it. All right, and the alert service, again, designed for day trades and short-term swing trades. It's not an investment service. Designed for traders who can't watch the market all day. You're going to get real-time alerts on the highest probability trade setups. I haven't had many alerts in the last week because the market is so volatile, up and down, big, huge amounts. It was down. We didn't have hardly any alerts out there this week. We did have trades in the room because they were quick intraday trades. I don't do quick intraday trades on the alerts because you won't have time to get it and get out. And the highest probability trades by identifying institutional involvement, what the market internals are, and then we do technical analysis. That's what the alert service looks for. Okay, this is my equity curve. This is how much. This is if you put 2,000 into each trade in the room so far this year. This is where your profitability would be. These are the ones that I post, so these would be the exact ones you'd see if you were in the room. pretty good, pretty good. I mean, this is typically what it looks like. It goes bottom left, upper right, and you get good months, you get weaker months, but nothing for pretty good one. All right, so any questions before I want to go into Heiken-Ashi because I know a lot of people came here to look at Heiken-Ashi or talk about Heiken-Ashi candles. So I'm going to go into some Heiken-Ashi detail right here. Okay, any questions on what I've covered so far? I know I'm covering a lot of information, so we have limited time. So, okay, all right. So we're going to talk about Heiken-Ashi candles here. If you've not used them, all right. So this is on FX, by the way. This is a British pound Japanese yen, but it doesn't make any difference. This was just a graphic I used to show what Heiken-Ashi candles look like. All right, Heiken-Ashi candles are made up of two candles. They make up this. There's two candles that make them up. Two candles together. Candle one, candle two. You're gonna get one Heiken-Ashi candle. Heiken-Ashi bearish candles have flat tops. See that? No wicks on it. Flat top, flat top, flat top. These are Heiken-Ashi bearish candles, right? There could obviously be a lot of noise inside here, but this is what Heiken-Ashi candles look like. So this is a bearish Heiken-Ashi trend right here. Notice it's coming down with flat tops almost all the way. Okay, so those are Heiken-Ashi candles, bearish, flat tops. Now you start to get a little bit of chop here. Green and wicks and tails, wicks and tails. This is a Heiken-Ashi candle bull. This is a bullish Heiken-Ashi flat bottom candle. Arthur, did they ever toss me out of casinos? Yes, yeah, Arthur. When I was card counting, I get booted us from several Caesars, Golden Nugget, MGM when I was out there, Hacienda when it was there, Dunes, I think. I can't remember them all, but yeah, I get barred from a lot. But there was a lot of casinos. All right, so back to Heiken-Ashi. So now when this thing reverses right here, that's a bullish Heiken-Ashi reversal right here. Okay, but I want to point something out here. This is a caveat for this. You see how big these candles are in this downtrend? And let's say you're trying to go long this, you're waiting for it to pull back and you want to go long. This Heiken-Ashi candle, bullish Heiken-Ashi candle, I wouldn't take the entry here because it's not big enough. The trend down has been too strong. So I don't really want to jump in here. Now it worked for a short time. You notice you get flat bottom, then wicks and tails, and then it starts to reverse back down again. But I wouldn't take it here. I'd be waiting for a better pullback with a stronger Heiken-Ashi reversal. So as the stock progresses here, you can see it moved up and then it pulled back again. Here's a bearish Heiken-Ashi reversal here and here. But I want to go long this stock. So I wait, and here is my Heiken-Ashi bullish Heiken-Ashi reversal right there. See, no lower shadow. That's a Heiken-Ashi reversal candle. Look at the size of that candle in relationship to this. That is where your interest is on this particular trade for Heiken-Ashi candle, right there at the bottom of that candle, right? And now it takes two candles to make this one candle, remember. But here's something to understand about Heiken-Ashi candles. When a candle is being constructed, let's say you're on a 5-minute chart and you're 2 minutes, 3 minutes, three minutes into the 5-minute candle. If you've got a flat bottom Heiken-Ashi candle, a bullish Heiken-Ashi candle, by 3 minutes in, it's going to stay there. 99% of the time, it's going to remain a bullish candle, which means you don't have to wait for the candle to close on a Heiken-Ashi candle to take the trade. You can make the assumption, and you'll be right most of the time, that Heiken-Ashi candle is going to be a Heiken-Ashi bullish reversal candle when that candle closes, right? So a lot of people don't understand that, but that's the case. So that helps a lot because you don't have to wait for this to close. Maybe right in here you could have got into the trade. Okay, so here's your Heiken-Ashi reversal here, bullish, bullish, bullish. You see the trend, how easy it is to see the trend, and here's where you get out. You notice you're getting wicks and tails, then you get a red candle, you're out of the trade. That is your Heiken-Ashi reversal trade for a bullish reversal, and you would assume that your support level is somewhere down in here. All right, okay. So the distinction of the Heiken-Ashi candles to remember: bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversals are identified by flat top Heiken-Ashi candles followed by flat bottomed Heiken-Ashi candles. And they don't have to be one right after the other. You can have doji candles in between. And bearish Heiken-Ashi reversals are identified by flat bottomed Heiken-Ashi candles followed by flat top Heiken-Ashi candles. Those are your reversals. That's one of the most important ways I use these Heiken-Ashi candles. Okay? So again, this just kind of shows us what we were just looking at in that last chart, goes into some detail, but it's what I just said. Here's your downtrend, which is pretty strong, an uptrend that's not strong enough, and then you reverse right here. For example, let's say this blue line was your VWAP, and this is where you wanted to get in to a long as it comes back up through the VWAP. Here's where you take it right there. Heiken-Ashi candle right here and here. One of those two candles will get you in, and then you get a little red candle here, but it doesn't break below the VWAP. So you stay in the trade, and this is the trade you would have gotten. I might have gotten out right here, but this is basically where you're going to get out. But I probably would have taken profits up here. That's a pretty big profit in that particular trade. All right. So again, we just went over that. So the advantages of Heiken-Ashi candles, you may already see this. It smooths out the price action, reducing noise. When you're trading on a 5-minute chart, for example, some of the 5-minute regular candles can be really squirrely. They move up, you get your wicks, the tails. Sellers come in, it pushes it down, then the buyers come right back in again. When you're trading Heiken-Ashi, that's not gonna show up. So it smooths out the noise, and it's also gonna reduce the emotion in your trade because of that. It makes identifying trends much easier. It improves identifying confirmation of trends and trend reversals. This is the big key one right here. Identifying trend reversals where you can get in. You're trying to get into a trend right at the beginning of the reversal back into the original trend. And again, it helps identify potential exits when the candle bodies shrink or reversal occurs. Typically, when I'm in a trade and I'm using Heiken-Ashi candles to get into it, I'll switch to regular candles when I want to get out. When I'm getting close to my profit target, I'll switch to regular candles, because if I'm going to wait for a Heiken-Ashi reversal to get out, I'm going to actually wait I'm going to have to wait 2 candles. Whereas if I'm ready to get out now, I'll take the reversal off the regular candles. I may miss a little bit more of the upside if it reverses back up again, but at that point, I'm satisfied with my profits and I'm going to take them. Okay. All right. So I'm going to show you a few charts here. This is Uber. This is an old chart, but this is regular candlesticks on Uber right here. And I want you to recognize his date. Look at May 1st. Right, here's May 1st right here. Brad, you do that as well. You switch the candles. Yeah, you switch to regular candles. Yeah, I think it's a good methodology. So this is Uber. Here's May 1st. Gap up, big move up. But it's very hard to off of regular candlesticks to decide if I'm going to take this here, right? So let's take a look at the same thing. May 1st. Here's May 1st on Uber right here. See how this downtrend is? These are Heiken-Ashi candles right here, bearish Heiken-Ashi. And this is my TC2000 chart, by the way. This is what I use for my technical analysis, my detailed technical analysis. But this is a Heiken-Ashi reversal right here. It's a Heiken-Ashi candle. This is a bearish trend and a big Heiken-Ashi reversal to the upside. May 1st. This is where you would take the trade. Right there on this Heiken-Ashi candle, somewhere during, this is a daily chart, somewhere during the day, probably by about 1 o'clock or 2 o'clock, it's already confirmed that that's going to be Heiken-Ashi reversal candle. You take it right there, and then you can take it May 1st here, and then you ride it right up. It's still bullish, you get out right here. Okay, it's starting to flatten out, and this is the 8 exponential moving average right here on my TC2000 chart. Again, I use TC2000 for deep technical analysis. I show this in the room a lot. You don't have to have TC2000, but I use it. I color code my candles when they're green and the compression is breaking. Bollinger Bands are expanding. I color them blue. When they're bearish, with compression to the downside and the Bollinger Bands are expanding at width. In other words, I'm getting a compression break. I color them pink, so I can see the strength of the trend. Okay, so that's the difference. And here's where you would have been much harder to get it here than it would have been to get it right here. And they don't always work. Let's be honest. Nothing works 100%, but these are very, very effective. Let's see, Richard, did you understand an uptrend? Expect flat bottoms, but when small candles appear at the bottom, it could be an early reversal to the downtrend. Small candles appear at the bottom. I'm not sure what you mean by that. Small candles appear at the bottom. I mean, if the candles start getting smaller and they start putting in wicks and tails, they become dojis. Yeah, if they do that, yeah, if it's small wicks, yeah, they can. But you don't have to get out based on small wicks. You want to kind of give yourself some time on these things, because typically you've got a support level that you're leaning on. So you know, you kind of want to wait. Like these going up here, you notice how these got a little bit smaller, but they still had flat bottoms. Now I didn't. This one here, this would be one that you would probably, because you've got so much profit in this, this would probably be the one that would take you out right here. Right? That's what I would probably use to get out. All right, so I'm going to look at some Heiken-Ashi reversals on live charts here. Now I'm going to look at on my SPY super system. All right, and I've got a few Heiken-Ashis that on the daily chart that I scanned for that showed up from yesterday. First, I'm going to show you MAS. Right, this is a bullish Heiken-Ashi reversal. Now on here, I've got these candlesticks set to Heiken-Ashi. See right there, you can switch them from Heiken-Ashi to regular candles. I got these set to Heiken-Ashi right here. All right, so we'll stick Heiken-Ashi. This is MAS. This is a Heiken-Ashi reversal to the upside. See the bearish trend? Would I take this for a long here? I would not. All right, and why wouldn't I? Because of this. If I'm going to take a swing trade, remember, this overrides everything else. The current time frame momentum on the daily and the multi-time frame momentum both need to be bullish here, right? I've got bullishness on the current time frame, but I do not have bullishness on the multi-time frame yet, because this is such a deep move down, right? So I wouldn't take it. I would be waiting to see. It may still work, but I wouldn't take that one. Right now, there's another one here, MTG. This is another bullish one. Okay, this is MTG. See this bullish move here? See the Heiken-Ashi reversal? Can't touch it. Can't touch it. Bearish, multi-time frame, current time frame. I don't want to touch this MTG. All right? That's EFX. That's another bullish one. Another bullish Heiken-Ashi reversal. Again, I can't take it. See, it's blue here and red here. Institutions have not switched over to doing this in a big enough position as far as a multi-time frame for me to take it. It's too soon. It's too soon. I might be able to take it another day or so. I can't take it. This is what that EFX looks like on TC2000. See the Heiken-Ashi reversal here? But notice how strong this move down was. It looks nice. It's breaking above the 8 and the 15. That's the white is 8, the orange here is 15. But I'm not going to take it. And see, this is a regular candle. That's a Heiken-Ashi candle with a flat bottom. Here's my regular candle on it right there. But I can't take it because I don't have any confirmation that the institutions are in the trade. Right? Got another one here, UHS. Right here's UHS. What's UHS like? UHS looks great. You know, universal healthcare. Really nice compression here, breaking out with a Heiken-Ashi, the wick and tail, flat bottom, Heiken-Ashi candle right there on UHS to the upside. This would be an entry for Monday if it opens green. Right, and I'll show you the TC2000 chart just so you can see that. There's TC2000. See the compression. There's the move right there. That's a regular candle, right? If I switch to Heiken-Ashi candles, here's the Heiken-Ashi candle. It's coming out of a compression. And a lot of times when you get blue candles, by the way, you'll get a bunch of them. Just like you got one here. See the bunch of them? How this just rode up there beautifully. This has been pretty bullish, and it's just compressing here. But this is an early entry into the next leg up, is how I would interpret that. Okay, and CTSH, one other long, and then we'll look at a couple of shorts. CTSH right here, another long. Can I take it? I can. Bullish. It's been bullish on multi-time frame for a while. It just turned bullish right now on the current time frame, and I got a Heiken-Ashi reversal to the upside on CTSH. So could I take it? I could. That could be another one to take on Monday. All right. All right. Let me look at a couple of bearish ones too. CPNG. Bearish. Now this would be considered not a Heiken-Ashi reversal. This would be a bearish Heiken-Ashi continuation. You're in the trend with flat bottoms, flat tops, and they're getting smaller. And now we're getting another. See, we had a wick and a tail here. Flat top. This is a continuation of CPNG to the downside. That's a continuation. Are they selling it? They're selling the heck out of this thing. This was actually a beautiful entry right here for this. But if you didn't get it, here's one right now to take it to continuation to the downside. All right. It's Here's the TC2000 chart on it from my deeper technical analysis. You can see it's pulling down in here. This setup right here, this is known as a bearish doji sandwich. Bearish doji sandwich. Bearish doji sandwich means you've got a big red candle, this is pink, but a big red candle followed by a doji. Generally speaking, what happens if it breaks to the downside on Monday, it's likely going to produce a candle about the same size as this one here. That's why they call it a bearish doji sandwich. And they can be bullish the same way. But that's what that looks like. That's how I go into some more technical analysis on these things. Let me move that out of the way. All right, so there's some shorts. I think we have a couple of other ones actually that are pretty good. There's LNG. See, another one that's good. See, the multi-time frame, current time frame momentum, both bearish. OKLO. This has been one of the darlings of the little nuclears. Is it bearish? Yeah. And this has been coming down for a while. This is a bearish continuation. Another deep set, good setup, an OKLO for a short. And GSIT, I think I had that one up there. GSIT, another good short. See, institutions selling right across the board. So I just want to show you how you use the Heiken-Ashi reversal candles and how you need to use the SPY super system in conjunction with that to be able to determine whether it's a trade you want to take. All of these shorts were good, which wouldn't be surprising considering what kind of a week we had with that huge drop down on Thursday. Okay, so those are Heiken-Ashi candles. That's how we use them. Let me go back to the presentation here. Okay, so we looked at some live ones. All right, now I want to just kind of run quickly through the results we had in the room. You've seen the SPY super system now. You've seen the Heiken-Ashi candles. I'm going to show the results we've had. I'm going to run through these pretty quickly because I have a lot of them, but I don't need to go through them all. This is the 2023. This is using $2,000. As I said, I use that for standard. $2,000 per trade. This is in the SPY super system trading room. Produced a profit a little over 60,000 in 2023, about 55,000 a month roughly. All right. 2024, about 4,500 a month, 54,009, a little less. And the profitability year to year, a lot of times is dependent on how much trending days you have in the market and how many choppy days you have in the market. Because you can make more money on trending days, obviously. You can stay in the trades longer. All right, and 2025, this is through September. We're up 47,765. We've moved up through 50,000 now. But that's about 5,300 a month, which is the best monthly return we've had in the last 4 years. All right, and I just kind of want to point out. I was talking about how bearish people were back in April when the tariffs went on and the tariffs came off. During the time when the SPY dropped 10% on those tariff up and down, we had 4 trades on, only 4 trades. We had them in the room and we had them on the alert service. These are the only 4 we had. They were all bearish, right? We had Broadcom, ABGO. We get in for $75 and get out for $104 per contract, 39%. Nike was massive. This is kind of an outlier. We get in for $285 a contract. We close it for $9 a contract, 216% profit. Again, best trade of the year by a long shot. But the reason we did this happened for us, we were short. It showed bearish. Everything was red. We took it short. They put the tariffs on. They put 39% tariffs is what they said they were going to put on Vietnam. Nike manufactures all of their shoes over there. So it tanks and we get out as soon as it tanked down. Sarepta, 78% profit, and NNE, 25% profit. This is more in line with what we normally get. But those are the only 4 trades we had on. While the market was down 10% in 2 days, we made this much money, and it was a good time. And people were getting clobbered. They were getting absolutely clobbered. All right, so just to kind of run through this year so far, I'm starting here in June. I was on vacation for a couple of weeks in June, so we didn't have a lot of trades. We had 10 wins and 1 loss, 91% win rate. We did about 37.90 if you put 2,000 each one of these trades. We did have a loss in Sarepta, but notice the percentages. This is what I kind of emphasize. This is the kind of percentage gains you're going to see when we have winning trades, 20, 25, 30, 35, 40. That's the normal range we're going to see in the trades that we take. Okay. This was July. We had a lot of trades in July. It was a good month. We had a nice trending market. We had a beautiful month. We had some losers. You can see we had some losers here. But July, 30 wins and 3 losses. This is really difficult, 91% win rate. This is, believe me, take it from me, this is very difficult to try to maintain, to do a 90% win rate. Really, really hard. 2,000 invested in each trade, produced $16,829 in profits. This was a massive month for us. Don't look at this and think this is normal. This is not normal. This is very, very outsized from what we get. August, we did 20 wins, 4 losses, 84% win rate, 59.60. This is more in line. In September, we had 21 wins, 4 losses, 84% win rate, 47.44, with some losses in there. Okay. I'm not going to go through all of these. This goes all the way back to January 2024. I want to point out that you can see the percentage gains we have here. 32, 37, 25, 21, 39. We have a 96 in here, but generally speaking, this is what you're going to see in the trades that you take. What was the average time frame in each July trade? I have to go back and look. I don't know how many swing trades we had in there. There was quite a few intraday trades. I would say probably the average time frame is 2 to 3 days, Dwayne, on those, except for the intraday trades. But I would say normally 2 to 3 days. Sometimes they'll last a week, and things like the credit spreads can last 3 weeks. But that time frame is fairly quick. All right, there's January, February, and I won't go through all of these, but I just want you to see these percentages. January 2024 was another big month, $11,000 in profits. May, here we had a bunch of time spreads here, just so you can see that 88% win rate, 81% win rate in the room, 88% win rate on the alerted trades. Alerted trades had a better win rate than the room did, but the room still made more money. All right, there's June, 25 and 4, 86% win rate. So I just keep running through these. You can see the percentages. I'm not going to beat these things to death, but I did want to show September last year. This was my losing month. I had 1 losing month. This was it. We had 8 wins and 5 losses, 62% win rate. For me, pretty embarrassing to lose $1,700. It's not a very big loss, and you can see we made $4,500 here in August, lost $1,700. The alert service was only down $295. And then in October, we came right back with $74.48. So we went from $1,700 down to $7,448 profits, and the alert service ran up to $6,063. But I do want to point out that we do have losses, and you're going to probably have a losing month every now and then. Not very often, but everybody has losses, and sometimes you get a news event or something that, like this Regeneron was a news event. Nothing you can do about it. All right. And again, this was January, February, March, April of this year. Again, 84, 89, 83, 81. This is what you typically see. All right. That kind of covers the results for there. This, if you're interested in the alert service, this is what the alert looks like. The first alert you will get, like we get on Nike, this is what the alert would be. It has the date. It's going to have your symbol right here, your Nike. By April 11th, there's your expiration date, 67 puts. There's your strike price for 285. That's what the alert would look like. And then you get another alert that says this with a sell order of $9, telling you what to put a sell order in. And then when it's completed, you'd say, okay, they were sold for April 3rd. Sometimes I say the percentage gain, etc. And you could get more than this. If I put a sell order in for 9, and then I wanted to change it to 850 or 950, you get another alert that also told you that. Right? Okay. And how do we achieve these results? I think you probably know already. We identify when institutions are driving a trade and when the market internals are heavily bearish or bullish. We take the trades when both of those things are lined up, for the most part. I will take trades that institutions are in if the market internals are neutral, but I won't take them if the market internals are bearish. Okay. And again, how do we get these? I've already told triple screen assessment of momentum trend. We also do some money flow. This is a key thing. This is how we tell if institutions are in the trade. All right, and again, we're just going to look at these again. Here's the SPY super system. This is the new format. Current time frame momentum here, multi-time frame momentum here, long-term trend here. On the 5-minute chart, here's your VWAP, your 15 EMA, and an 8 exponential moving average. A little tip: when you have a 5-minute chart and you've got the 8 above the 15 the stock is bullish. When you have the 8 below the 15, the stock is bearish. And when you get a crossover of the 8 crossing through the 15, this could be an entry for a bearish trade. You wouldn't take it here because you're right on the VWAP, but a break from the 8 below the 15 is a bearish crossover. And I have these pop signals. I don't think I mentioned these. These tell you if the stock is breaking out of compression to the upside with pink and to the downside with blue. Okay. And again, there's a new template. It kind of shows you the trade right there. This is where you would take it as it went green, get out as it goes back to red. This was a SPY super system Heiken-Ashi reversal from way back in 2025. This in February. This shows these are Heiken-Ashi reversals. Here's a Heiken-Ashi reversal on the Qs on a 5-minute chart, because you can use Heiken-Ashi on the 5-minute. That was the entry right there. You see the 15 EMA? This was before I had the 8 on here. Here's the 15 EMA right there. You ride this thing down on the 15 EMA. Notice how it stays bullish, bearish, stays bearish, stays. You could just keep I'd still be in this trade if you wanted to, because it stayed below the 15. You didn't get any reversals at all. You notice we went in right when it went from buying green to selling yellow, right there. Institutions went from buying to selling, and we jumped on the bandwagon. Super intraday, these are the size from intraday trades. I'll just run through this quickly. These are the SPYs, Qs, the IW1, the futures. These are my results, right? These are my results. This is not room results because I can't post these, but I want you to see how effective it is. And these are completely separate trades from what we post in the room. All right, but this was July of 2024, August of 2024. You see how many trades I took? 56 wins, 6 losses, 2 scratches, because they're very quick. They only last 1, 2, 3 candles. But I've never had a losing month with trading these SPY super system trades. And if you're only going to have one trade on at a time, they're going to be very short duration trades. You can use things like OCO when you go in, or a trailing stop when if you're in the trade, but they're going to be fairly quick. And there's November and December. Again, very, very good profits on these things. This was October of last year. This was what we did with the SPY super system trades, or what I did, and last October. And this is what the room did. These are trades. If you took in the room, this is what you would have made. These are ones I took. I can't tell you if you would have taken these or not. Everybody uses them. You know, they use. I show you when they're set up, but I can't point them all out. And we have a lot of traders in the room that trade this all the time. But this total does not include this. This does not include this. There's separate totals. All right. So again, this was November. It was December, and here was the last quarter of last year. 87% win rate in the SPY super system. 86% win rate on the options trading room. We're using the same indicators. We're using the SPY super system. We're using the VWAP. We're using the 15. So the results are going to be very, very similar. All right. And so this was a SPY super system trade. Again, I just kind of want you to see the setup, right? Bearish, bullish. Here's your entry. Notice we go from bearish to bullish. Current time frame momentum. Take it right here. You ride this thing up. This is a very big trade. This is not usual that you get this big a run in the SPY. All right. So that's $220 profit per contract. 10 contracts, $2,200. That's a pretty nice trade right there, right? But again, here's the VWAP. We took it right at the VWAP, right over the 15. The 15 would be the stop. And this was another one right here. This we only took for one candle. Again, selling, breaking down with a pop out of the box, telling us that compression is breaking out of compression. Take it there, get out right there. And that's a Heiken-Ashi candle. All right, another one. This was in and out very quickly, just using the SPY super system intraday trade only off the current time frame momentum. Again, this was a new template for this. This is the new one. This is for folks who want to have the software, but are only going to trade intraday trades. You can put this template on there. You can swap them back and forth. You get both of them. You get this one and you get this one. But it's up to you which one you want to use, depending on what kind of trading you're doing at the time. This was another beautiful trade here. See, this is where you would take it as it went green. Take it here, out right there. Beautiful trade here. This was another big one. Again, see the pop out of the box. It's breaking down right below the VWAP, right there. We're already red. Everything, the institutions are selling the heck out of this thing, but down it comes. Again, this is an older chart. I have switched this to the actual oscillator on here. Okay, and these are some of the high probability trade setup we took. These was actually constructed to be swing trades. This was a line that we took for a swing trade, but it ended up turning into a day trade. We took it right here as it was going compressing here. Notice buying, 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 selling. We take it right here, and we rode this thing down, and we were up 52%, 51% an hour. So I took it off. I actually had structured it off the daily chart to take as a swing, but we were up 51%, and then I started to get some movement here. I figured I could re-enter it for a swing if I wanted to, but we took the profits in that one. URGN, another daily chart here. This is where we get in the URGN. Now this was selling here, and it switched to buying, but it was compressing, so we waited for a pop above the 15 on the daily chart. Took it here. We didn't really do anything. It just kind of moved sideways. But notice the institutions, notice how they're green here and blue here is still buying. So we stayed in the trade. There was no reason to exit this trade. Stayed above 15. We got a nice pop this morning. On that morning, we took it off. One of the things I follow in the room is gaps of gifts. If you get a gap up in a bullish trade in the morning, you get a 2, 3, 4, 5% gap up, take the money. Same thing on the gap down. Gaps of gifts. A lot of people think they want to stay in there and try to squeeze out more profits, but there's 2 reasons not to do that. First thing is, when a stock gaps up, the most likely thing for it to do is to move sideways or pull back. Less than 1 out of 3 times it will continue to go up. And the second thing is, when a stock gaps up or gaps down, the implied volatility in the option premiums is increased. The market makers increase it because of that big move. So the premium that you're going to get when you sell the put or you sell the call right at the open is going to be maximized. If that stock stays at that level for like 10 minutes, the premiums you would collect 10 minutes later are going to be lower. So that's why that's why gaps are gifts. Here's NVIDIA. Again, I showed you this one, pullback, PBO, right off the 15, moves up beautifully. Very, very nice trade there. Again, institutions buying it. We don't have to worry. We know they can buy it. SMR, I showed you this one already. This was Nike. So this is where we get in Nike right here in 328. You see this red candle? See how the institutions are selling the heck out of this thing? All right, so we took it here. We were actually up money, but some people I think get out. But I stayed in it. The room stayed in it, and this is where the tariffs went on. Bing. See that gap down? That's a big gap down right there. That's the one we made 216% on. There's the gap down, and we get out on the gap down. Right? Gaps of gifts. We took the gap, and just look what it did. Boom, boom, right back up again. Could have got more, I suppose, but we really had a huge amount of volatility in the option premium at the time, which is why we get 216%. I was not going to pass that one up. Sarepta, same thing. Here we get in here in Sarepta. Look at the selling. I mean, institutions are all selling this. So we took this and we wrote it down and get out right there as it fell down there. HIMS, this was a long one. This is a daily chart. Here's the 15. Here's where I took it. I don't know why I didn't take it earlier, honestly. Again, the VWAP doesn't apply in the daily chart. It was right off the 15. If I'd been watching, this is where I should have taken it. When this went green and this went green, that was the entry level. I didn't take it. I took it here. And I wrote it up 25%. I did leave a runner on and produced 269%, but I didn't count that in any of our results. But it was when I left a couple of them on. Okay, so that is the results. That is some of that's the SPY Super System chart you've seen. You've seen Heiken-Ashi candles and how to maybe use them to improve your trading. I think if you use them, you will improve your trading. Here's again just a recap of what we do in the room. All of these particular strategies. If you're a trader, obviously you're going to have bullish trends in the market, bearish trends in the market, choppy trends in the market. You've got to have strategies that apply to the particular market direction that you've got. So we've got all these strategies. It's up to, I select the one I think that's going to give me my best return based on the market conditions and based on the stock movement. Okay, so after that, these are the offers that we have. And again, I believe the offers are over there in the chat box. If you click on the chat, I think it's got the link in there. Yeah, the chat has the link to these offers. But here, this is what they are. These are the Black Friday special. These are pretty nice. Again, if you want to take a free trial, it's a 2-week trial. You're going to get the text alert service. You're going to get the trading room, and you're going to get to see the videos on trading that I do. Then it switches to $396 a quarter. Right? That's the most expensive way to get into the room. If you want to take the text in the live room for annually, this is a good deal. You're getting the text alerts in the trading room, and you're getting all my trading, all the webinars I've done. Basically, they're yeah, I guess you call them webinars. But you go in there and basically you have a video on what the different strategies are. And then also you get access to a Discord chat. We've got two professional traders in there that are in there all day long. They post the trades that we post in the room. They also post their own charts, and they talk about, they answer questions for you. You can actually talk to them live and listen to them live in there. And then the all-inclusive bundle. This is the live trading room and the SPY Super System software. This is the trading room and the software, right, that we just showed. This doesn't have the software. The software you'll see in the room, but this actually is the room and the software, and of course my access to the webinars and the training and the private Discord chat. I guess that's access. Get a little extra S's in there. But this is what the one-time payment gets you on this: the room and the software. This is forever. Now, all the updates, all the scanners, anything we change, you get that $24.96. Now over here, this is the on the SPY Super System and scanners. This is for the software. SPY Super System software. If you just want the software, you're going to get the scanners, of course. You're going to get the my master classes. You'll get the software put on your machine by the folks from Rightline, and then you get 1 month in the options for live trading room. $9.98. Really a good deal for that software. If you because you can use it whether you're in the room, not in the room. You can use this on your own forever. And then there's the one-time payment. This is the what a lot of people buy for. This is the best one. But you get the SPY software, you get the trading room, you get the scanners, you get my training, and you get the all the software installed just like you do here. But this is $24.98 forever. So those are the offers. This is where you can call Rory to find out if you have any questions. Maybe you're looking for maybe a different kind of time frame than what we've got listed here. But again, free trial, text room and live room for a year, and text room right here. This is a trading room in the SPY Super System forever. Same thing as this one right here. All right. So really good deals. And again, just kind of depends on what you want to do. You know, how much do you want to invest in your trading future? So I appreciate everybody coming here today. I appreciate all the good questions. Again, there's Rory's number right there. By the way, this is the return on subscription investment. I'm using a subscription of $1,600, which is basically if you do the quarterly. Average trade size 2,000, assuming all trades taken. Your results right now per year, 40 times your subscription costs. You're getting 40 times your subscription costs back every single year at the maximum rate of $1,600 here. Again, so if this is consistently paid for itself, doesn't mean that that's what's going to happen in the future, of course. Past performance, not indicative of future results. All right, and again, here's Rory's number down here. If you want to put your name and number in there, he'll call you, or you can call him, 786-732-4656. And that is the presentation. I appreciate your intention for all this time. Thank you for coming here on a Saturday. Again, I'm a professional trader. I'm not a professional presenter, and I'm not a salesperson, but I'm just trying to share what I know works so well. I've been using it for so long with other traders. I've got hundreds of them in the room, and I look forward to having some of you folks join me in the room or on the alert service. So have a great weekend. Enjoy yourself. We'll see everybody back on Monday. Have a great weekend. Hey, Brad. Thanks very much. I appreciate that. I try to be I'm very candid. I try to be very transparent in how this methodology works. I don't promise features. I don't promise fast cars, big mansions. Trading is a business. You've got to have a good methodology, and you've got to be very, very methodical and follow it, and have patience. It's not easy business. All right, have a great one. Thanks, Dwayne. Appreciate it. Thank you very much. Everybody have a great weekend. Enjoy your Saturday and Sunday. If I don't see you, have a great Thanksgiving and holidays coming up. Short week next week, of course, and we'll see everybody. Hopefully, we'll see some of you folks back in the room on Monday. We'll have to see you there. Just hit me up if you're in the room. I'm always available to answer any questions and chat with you. You can always get a hold of me any way you want to. So, all right, see everybody, some folks on Monday. Have a great weekend.